Hi there, welcome back. Hope you are doing great. In the last video, I mentioned terms like primary market and secondary market, but didn't get a chance to elaborate much. So, here's the in-depth video on the same topic. Most probably, you have heard about IPO rights and debentures. If you haven't, no problem. These are the securities issued in primary market. Now, you may be thinking, what is a primary market then? It's pretty simple. It's a market where companies issue securities to general public to raise capital required. To put it in more simpler way, it's a market for new securities. There are mainly three participants. First is the company who needs capital. Second is the issue manager who helps company to issue share. And third is the investor. The shares issued in this market have time limit, meaning shares are offered for a certain period. So, interested investors must apply before the due date. To have more clarity how primary market works, let's see an example. A company named XYZ needs capital, so it decides to collect those amounts by issuing stock. It then appoints issue manager who will draft documents, get approval from the regulator, and help company list its stock. Once company gets approval, it issues share to general public. Now, among hundreds of investors, let's imagine there is an investor named Mr. A. What he does is simply fill up a ASPA form before the due date and wait few weeks before the result, that is allotment of share. Again, let us assume Mr. A was allotted 20 unit shares. Once allotment is completed, his bank balance will be deducted and allotted shares are sent to his demat account. This is how primary market functions. Now, moving on, let's see what secondary market and how it works. It is a market where stock of listed company are traded. It's basically the place where stock of primary market are bought and sold between investors. There are many participants in this market, but investors, brokers, and stock exchange are the major ones. Unlike primary market, one can buy or sell the stock of same company multiples of time. With the help of example, let's understand it more clearly. I would like to continue the prior example of XYZ company here. Let us suppose there is an investor named Mr. B who wants to buy share of XYZ company. For that, he can either call his broker or trade himself if he has got online trading account. On the other hand, Mr. A, who was allotted share of XYZ company, wants to sell it. So, he also has got two options, either call his broker or apply online. Here in this example, let's imagine both Mr. A and Mr. B place their order through traditional method, that is by calling their broker. Once the both buy and sell order are matched, a successful transaction occurs. Buyers get the share and seller gets the amount. So, this is how secondary market works. One must have different accounts to be able to buy and sell stock, which I'll be discussing on next video. I do really hope this video helped you to get insights on primary and secondary market. Would like to thank you for sticking till the end. I'll catch you in the next video. Until then, bye-bye.